What's going on, guys? It's Jeremy from Ask Jeremy, and I wanted to talk to you about the recent drop in lumber prices and how that might affect new homes. If you weren't aware, back in May of 2021, lumber prices reached an all-time high of almost $1,700. But then only a few months later, it dropped all the way down to under $500, only to bounce back up to almost $1,500 this past March, and are currently fluctuating around the $600 range. Now, it's probably no surprise to you that supply chain shortages have played a major factor in the price for this lumber. But the hope is, as lumber prices are beginning to stabilize, will this help reduce the cost of new construction homes, and will that affect the overall housing market? Well, if you listen to Tim Morris, associate broker at HomeSmart, the simple answer is no. In an interview with AZ Big Media, he said, "Everybody has seen articles saying lumber prices are falling by 49% or more and think that affects their ability to acquire a new home. It's completely disconnected. The only place you see that is Wall Street Journal. The volatility of the market is creating the need for everybody to understand that the buyer is the one who's going to be at risk." So that's the bad news, but the good news is it might not matter. The reason being, for the first time since 2019, we're actually seeing a positive move in housing inventory. That means the supply is beginning to catch up with demand. As a result, we're seeing an increase in price reductions for houses that are on the market because they're not selling for what they expected to be selling at. Now, if you're looking at the median price for houses sold this year, you're probably not going to see that effect yet. Keep in mind, real estate numbers lag by a month or two, because that's how long it takes for a house that goes under contract usually to close out. And just because a house is under contract for a certain value doesn't mean it's going to close at that. Renegotiations in price tend to happen with houses under contract due to inspection reports, appraisals, and a number of other variables. Numbers for Q2 of this year are going to tell us a lot about what's happening in the real estate market, but the real impact of the inventory increase might not actually be felt until Q3 or even Q4. Personally, as a real estate agent, I've seen a ton of houses recently that were under contract end up not closing, and when they come back on the market, they have a reduced price in order to sell. Now, is that trend going to continue, and will we see a cooling off of the market on a larger level? Well, a lot of experts seem to think so, but keep in mind that experts also believed in 2020, when the market crashed, that the housing market was going to crash as well, and that did not happen. But I'd love to hear your thoughts. Comment down below with what you think is going on in the real estate market. And if you have any questions, just ask Jeremy by commenting down below or going to askjeremysc.com. Thanks, guys.